Good morning. Today we are going to be talking buy-to-let mortgages. I'm going to explain as a layperson, not as a financial advisor, but as a property investor, what they are, how you can use them and how you can get them. And we're going to do that beside the beach. So we'll have like dogs coming by, swimmers coming by. It is early in the morning. I'm going to do a workout later on. And you might know I live here half the time. I have a flat just around the corner. And I'm going to do a workout later on with my friend Charlie and then go for a swim in the sea. So get into property because, as you can tell, it's bloomin' well worth it. Right, I'm Susannah. If this is your first video, then welcome to my channel. I run the Good Property Company. We've got the channel. We sourced over 200 deals, £45 million worth of property for an agreed purchase price of 30 million quid. So I've got a pretty decent amount of experience. I've flipped a ton, raised millions, and very importantly, paid it all back, done a ton of joint ventures, and own a significant property portfolio that allows me to chill out on the beach now. It's not bad, is it? You can see the sunrise right behind me. And we're going to, and the other thing I've done for you guys is I've created a really super website called the Good Property Company. It is stacked full of information for you that you can download straight away. So you've got stuff on deal sourcing, you've got stuff on raising finance, you've got stuff on getting started, you've got downloadable checklists, you've got on-demand webinars. It's good. It's created for you. I spent a long time making that for you guys, so go and hop over. It's called thegoodpropertycompany.co.uk. Right, I'm not a financial advisor. This is just my opinion and my extensive experience as a buy-to-let landlord, as a flipper, as a JV partner on buy-to-let mortgages. So do take proper advice from an independent qualified financial advisor called an IFA, independent financial advisor. This is me just telling you what I know. Oh, I've had to move this. The sun is beautiful, but it was keeping me in dark shadow, and I wanted for you to be able to see what I was saying, so I've had to move around. So buy-to-let mortgages, what they are is the bank lends you a percentage of the value of the property. A typical value is 75% loan to value. So if the property is worth 100,000, you'll get 75,000 to be able to buy the property, and you need to supply the deposit. So it really helps you with leverage. It's called leverage in our industry. It really helps you stretch your money further in order to buy a property portfolio a lot quicker. So thank you very much, banks. Now, how do you get a buy-to-let mortgage if you are brand new? Well, first things, if you're still working in a day job, and I got my first 6 or 7, I think it was, houses, 1.8, my first little baby portfolio of £1.8 million while I was still doing a day job, and it took me 18 months before I then jumped out to go full time. But then I'm cautious, I take my time, make sure that bases are covered. Then if you're in a day job, typically they'll like you to earn at least 25,000 in order to be, okay, they've got some kind of earnings backing up. Typically they call you an experienced landlord if you've been a landlord for 6 months. So the very first buy-to-let mortgage, you're going to need to make sure, or your financial advisor is, that they will take on a new landlord rather than requiring you to have 6 months experience. Of course they exist, because how else do people get started? But just your financial advisor needs to be mindful of that. So that's as kind of starter for 10. But what if you're starting to go full-time in property? How are they going to judge you? Well, they're going to look at your property portfolio, they're going to look at your earnings, they're going to look at your tax return, they're going to look at your last 3 years of sets of accounts. They're going to look at the whole portfolio, not just this property. So keep a very organised spreadsheet of your property portfolio. When did you buy it? How much did you refurb it for? What was the purchase price? What's the current value? What's the current mortgage? What are the current mortgage payments? What's the current rent? Because you may get seriously detailed pieces of information. Keep all of your bank statements. Recently, I've had to ask my bookkeeper to annotate the last 6 months, and I've got a lot of tenants. The last 6 months of rent payments throughout all of my bank statements, just to evidence, yes, what we are telling you in our spreadsheet is true in our bank statements. Interesting, isn't it? So fine tooth comb stuff. But also the other way that they're going to check, can you actually afford this buy-to-let mortgage, is coverage. Now, coverage is sensible from the bank's point of view. You want to get this mortgage, it costs money. Can you pay for it with the rent? And how do they work that out? And again, it varies depending on their risk profile, but often they want to see that the rent coming in will be about 125%. So a quarter more rent rent coming in than the mortgage cost. So to make it super easy for you, if the mortgage is going to cost you 10 grand a year in interest cost, they're going to need £12,500 of rent predicted for that type of property before they'll agree to lend on it. All of that is pretty sensible so far. I mean, you got to be pretty damn organised, but pretty sensible. So just, have another cup of tea, get yourself organised. Next. So how do you apply for a buy-to-let mortgage? Well, you find the right broker. Independent financial advisor, my guy is a genius. I've worked with him for a very, very long time. What you do not want is a computer says no person. What you do want is somebody who will pick the phone up and say, I have got an interesting case here. Can I talk it through with you in advance to get an understanding of whether you would lend or not? So whether they're going to pick the phone up to the BDM, the business development manager, the sales director, the operations director. They've got an in. They know people in each of the commercial or buy-to-let mortgage companies, and they're going to have a conversation first to say, this is the case I'm going to be putting towards you. These are the things I think you're going to be asking about. Can we clear this in advance informally to understand your position on it before the client, i.e. you and I, spend a lot of time doing the application? That is not a computer says no person. That is somebody dedicated to their craft. So that's the kind of financial advisor you want. Independent financial advisor, not a computer says no, sorry, the application got turned down. I've never had applications turned down because my mortgage advisor goes in and just clears it first. And if we informally know that actually I don't fit their criteria, we don't apply. So we don't waste months of time, potentially lose the deal, and just get bored of doing admin. So how do you actually get a buy-to-let mortgage? Well, it's actually quite simple. I would strongly suggest you start with finding the right broker. You can find that through recommendations. I only give my broker to my academy members and to my mentoring guys, so I won't be giving them out to everybody because you'll get overloaded with work. So recommendations, find the right broker. Show the broker what it is that you're looking to buy, what loan to value you want, where your money's coming from. Make sure all of the admin I told you about earlier is in place, that you can supply that to them, and then they will give you kind of different options for you to choose from, usually in a spreadsheet. And I always like to add up the total cost over the period of the loan. I don't do it over a 25 year. I do it, say I'm taking 5 years fixed. I add up the total cost over the 5-year fixed. So you're adding in the fees, the survey fees, the lawyer's fees, the legal fees, the application fees, everything, plus the interest cost and what's the total cost. And a good broker will tell you that. And they might even highlight which one they think is the best one for you. In terms of, if you've asked for 5-year fix, they'll give you 3 options, and actually this one's cheaper. Then what you'll do is you'll say, yes, please, can we go for that one, please? You'll pay the survey fee. You'll pay whatever admin fee is required up front. Sometimes the fees can get rolled into the mortgage, sometimes they can't. Again, it'll all be there on from your broker. And then you get a written offer. Now, this isn't guaranteed that you're going to be able to draw down the mortgage, but usually it proceeds at that point. On that written offer, it can be anything it can be pages long. You've got to particularly just check everything is correct from what you agreed in the first place, but also near the end of that written offer, sometimes there are things called special conditions. And that might be contingent, you get this offer contingent on, I don't know, proving this is an HMO license, or giving the building regs certification, or sometimes it's you need to do some work. So occasionally they'll give you an offer, but they say, well, we think there's damp needing done based on the survey, so you're going to get 10 grand less, and then you do the work, and then you can draw down the final 10 grand. So just pay attention to that and make sure you can satisfy those special conditions, and do that super early. So once you've got the offer, woohoo! Conveyance like crazy, get the property bought, and it will be your solicitor who draws down the funding. So you don't need to actually phone up the mortgage company and say, can you give me the money? It's your broker, your IFA, who does the application for you and works with you throughout that whole process. You obviously have to provide all the admin, and I'm telling you, there's a lot of it, so lots of cups of tea. And then your solicitor, who's who's doing the legal conveyancing for you, buying the property, will be the one that draws down the money, pays for the house, and is your solicitor that you're going to need to give your deposit to. So the other thing, of course, you need to do is evidence to the mortgage company where the deposit came from in the first place. So whilst it's a bit like it's actually quite an easy process on buy-to-let mortgages. So please don't feel because you've never done it before, it is something that you can't do. I remember feeling quite daunted in the early days of buy-to-let mortgages. I got quite nervous. Will I be, I want to offer this house, but I don't know if I'm going to get that mortgage. Oh, what should I do? So what I used to do was get DIPs, decision in principles. Again, it's not a guarantee you're going to get the mortgage, but it's highly likely. So that's one way to kind of appease your nerves. These days, because I know my stuff, I don't do that, but in the early days, I definitely did. There you are. Buy-to-let mortgages explained on a beach in Barcelona. So remember to do a couple of things, guys. Subscribe to the channel because I've got a year's worth of videos ready and planned out for you, so I'm quite excited about that. And also remember, I told you about my website that I've put together for you, instantly downloadable education for you. I spent a lot of time creating that for you guys. Loads of checklists. You can get webinars immediately on demand. So there's a lot of help for you on my website, which is thegoodpropertycompany.co.uk. So I do want you to pop over there as well. I'm going to have a workout on the beach. I hope you have a super day, but most importantly, you absolutely can do this in property. Work hard, it'll work out for you. Good luck. If what we've put out for you guys really works for you, then fabulous. Support our channel, click the like button, and thank you so much.